Headlines read, Toronto condos just hit sales levels we haven't seen since 1991. Appraisals are coming in 30 to 35% below the purchase price. Rent just hit a 40-month low. Projects are getting cancelled. And now cities are panicking. And the same people who sold you this fairy tale are pretending they didn't see this coming. That's complete bullshit. So let's talk about it. You bought a pre-construction at $1,400 per square feet. You put 20% down. Closing date comes. Appraisal says $950. That's not market volatility. That's a 30+% haircut. And the bank doesn't care what you paid. They care what it's worth today. So now you are scrambling to cover the difference. Hundreds of $1,000s in some cases. And for years, there were blanket appraisals quietly smoothing this over. Magically, purchase price equals value. Why? Because it was better for lenders to break up $1.5 billion problem into 300 small mortgage problems. But regulators started sniffing around, and suddenly that trick not so easy anymore. Funny how that works. I hear the headlines today. Appraisals came in 35% below purchase price. Buyer is projecting a $2,900 monthly loss every month. Mortgage, fees, taxes, vacancy risk. That's over $30,000 a year to hold an asset that's falling in value. And this isn't some micro shoebox. This is a 800+ square feet unit. Now imagine the 500 square foot luxury lifestyle investments that sold at $1,400 per square feet. They are trading closer to $950 now. Some heading to $875. If your investment only works when interest rates are zero, it was never investment grade. Internet calls it a hopium, and hopium is not a strategy. Now let's twist the knife. Rents just hit a 4-year low. Why? Because inventory is flooding the market. Too many condos are being completed. Purpose-built rentals are exploding. The government expanded financing programs by billions to support rental construction. More rentals are finishing in the next 2 years than in decades prior. Good for renters, but brutal for leveraged investors, because when rent drops, value drops at the same time. That's not a correction. That's a squeeze. You want the symbol? Go check out the Bloor West project. It started in 2017, promised 2022, now aiming for 2028. Over a decade of disruptions at the busiest intersection in Toronto. $1.6 billion in debt. The developer collapsed into receivership. 314 purchase contracts cancelled. $105 million in deposits returned. 7 years of waiting. Then a court says, sorry, you are out. Same tower, new pricing, then relaunch. If the most hyped luxury tower in Canada can't survive higher rates, what the do you think is happening to the mid-tier investor condos? This wasn't just a project delay, it was a structural crack in the model. And here is the uncomfortable part. Some major developer families, they can just wait. They buy prime land, condos don't sell, they sit on it. We'll wait a few years. Must be nice when you've got compounded wealth for 40 years. Patience is easy. But the 29-year-old investor who put 20% down in 2021, he doesn't have 40 years of cushion. That's the imbalance. Heads, they win. Tails, you learn a very expensive lesson. Now, here's what's going on my local area. The city of Burlington is considering 2-year freeze on development charges to stimulate construction. No. Let the market correct itself. I strongly oppose it. When units were selling out in minutes, nobody froze nothing. When investors were flipping assignments like Pokemon cards, nobody said let's protect the end users. But now the math doesn't work. Suddenly we intervene. Development charges fund infrastructure, yes, but freezing them mid-downturn is not protecting affordability, it's protecting feasibility. And I'm not here to protect broken math. Let the market correct, because if you never allow correction, you guarantee the next bubble. And I'm tired of the cycle. Here's the big picture. This isn't anti-developer. This isn't anti-buyer. This isn't anti-government. This is an anti-fragile system. A housing market that only works when rates are zero and immigration is maxed out and appreciation is guaranteed. That's not housing. That's a speculation with a good PR. Short-term, condo pain. Long-term, supply hole forming. And 5 years from from now, when starts are down dramatically today, we'll be back here screaming about shortages again. Same movie, different trailer. If you are an end user buyer, stop buying hype, run the numbers. If it doesn't work at today's rate, it won't work. Housing is not a casino. And I did a recent podcast on it already. Go check out my YouTube channel and listen to it. And bailouts don't fix bad math. I'm the Angry Realtor. I fight for buyers, sellers, and the public. What housing topic are you angry about? See you next Sunday at noon.